Hi, I'm Paul Arrington, and I am one of the consultants with the Florida Small Business Development Center Network. And what I'm going to talk about now is the various legal structures and requirements that you need to look at in starting your business. And I always enjoy talking about the various legal structures. And the reason why I like talking about them is because whenever somebody develops their business plan, what I usually see is that they'll think about their marketing strategy. They'll think about who is the number of employees that they need. They'll think about the level of sales that they need to have, and they'll think very hard about how to go out there and really fill a niche that their competition is not in. But one of the things that they kind of take it for granted at the very end is, well, I'll just put this all into an LLC. Or I'll just start an S-Corp without really that much thought as to what is the best legal structure for their business. And sometimes the reason why I found that people come to that conclusion is because their friends started their business and they started as an LLC. Or a relative started their business and they started it and they've been going on successfully for years as an S-Corp. Without really thinking about how what they're doing might be a little bit different than the model that they're basing their decision on. So I want to talk about what those various legal structures are, what some of the advantages and disadvantages are of those various structures, and how some of them may uniquely fit or be very suitable for the type of business that you want to enter into. And the thing that you really want to think about in terms of this is that one type of structure is not, as I was saying earlier, suitable for everybody. But the other thing that you want to think about is that in general, that you want to make sure that you are in a position to control the operation of the business, but you don't necessarily want to be personally the owner of anything in the business. Because I'm going to talk in a few minutes about questions of liability, questions of if somebody wants to have recourse against you or some of the assets of the business. And in most cases, I have found it's beneficial to have a legal structure where the business itself is something separate than the owners of the business. But let's start out with a legal structure in which there is a complete similarity between the owner and the business, and that's sole proprietorship. And then we're going to talk about general or limited partnerships, the differences between C and S corporations, and then limited liability companies. So starting out, and some of the things that are going to be important in your considerations are, and selecting which ones of those entities would be the best, are the number of owners, and really it goes beyond even looking at the number of owners, but you also want to think about what each of the owners is actually bringing into the business, because to me that can really strongly impact the legal structure that you're going to ultimately decide for the business. You want to look at various exposures of liability, where they exist and where they may not. And then also some of the differences that in selecting legal structures is based upon how the tax treatment is for that legal structure. So looking at sole proprietorship. So if you started a business, it's only you're operating already, oftentimes people are selling items, say on eBay or so forth. They own rental property, they have some other type of online sales, or whatever it is that you're starting, and you have not selected any other formalized legal structure for the business, well, then you're already operating as a sole proprietorship. And that is probably one of the easiest, and it in fact is the easiest form to set up. And because all you have to do is start your business and you've already started. There's no real requirement with regards to any type of filing on the state level. And it's a very easy and very convenient way to start a business. I personally, and I do have a legal background, I personally am not, I'm not too enthusiastic about any business operating as a sole proprietorship, although there are some in which the risk is low enough that it's okay for you to do that. But basically, the rules and requirements of sole proprietorship is one owner, one of the negative sides is that there's unlimited liability. So what that means is that if something happens in the course of the business and somebody is not happy about it, well then if they bring an action or if they look for recourse, well then not only are the business assets subject to be seized or taken or exposed, but then that all of the other assets that are owned by that business owner are also subject to be seized. So to me, that probably is not the best of all scenarios for a business to operate in, but some do operate that way. In fact, I recall from several years ago a hotel that was actually operated as a sole proprietorship. But you can imagine all the different types of exposure and liability that could happen, could come up at any given time in a hotel. Now, if somebody is operating their business as a sole proprietorship, well then there are ways to protect oneself and to protect one's personal assets, and probably the biggest and easiest way to do that is to make sure that you have a proper level of insurance. So if anything does happen with regards to the property or the business, well then there is that insurance vehicle which hopefully will kick in and you'll be covered. But think about it, but think about a sole proprietorship in terms of not only are you operating in the business, but if you have a sole proprietorship, you have employees. Let's say an employee is out there in the course of business, they're driving their vehicle, and the vehicle has the business names on the side of it. They're going from one job to another, and there's an accident. Since the business is owned as a sole proprietorship, you very highly potentially would be opened up to exposure. So it's not necessarily, in my mind, the best type of structure for just about anybody who's in business. Unless it's like purely home-based and there's very low liability and you're doing consulting or something like that. For taxation purposes, well then the business income basically is your income. You know, at the end of the day, you could take that money, that whatever profits the business makes, and put it in your pocket. And the business income and losses are reported on the owner's 1040 as Schedule C expenses. So it's the easiest way to operate a business. It has a lot of exposure potential there for the owner, and I would not personally recommend it. The next level of business is general partnership. And what I see in many cases whenever clients come in to meet with me is that if it's more than one person, they're out there, they're engaged in activities, and I ask them, well, what type of legal structure do you have? And they say, well, no, we're just operating our business. Well, if there's more than one person operating that business and there's no other legal structure that has been decided upon among them, well then they are by default automatically operating as a general partnership. It does not require any type of agreement for it to have come into existence. And the way that I look at general partnerships is that those negative things that I was talking about as far as sole proprietorships, they are even worse when you look at it as a general partnership. Because one, you still have that similarity between the owners and the business, but on top of that, any decisions that are made by any of the partners becomes any of the other partners are liable for as well, even if the partners agree to the contrary. So let's say regarding a particular matter. So let's say that there are two partners. They meet, they decide that they are not going to buy a certain pallet of inventory, and then one of the partners goes out and buys it. Well then, and buys it in the capacity of the partnership. Well then, that automatically will then bring in the other partner to be liable for that as well. So again, general partnerships, in my mind, is not probably the best legal structure to operate your business in. I will say that the profits are taxed at the partner level. And if you do have a general partnership, well then I strongly recommend that you enter into a written partnership agreement, because now that will not protect you against any claims from outside parties. It's something that a partner has made an agreement or commitment that a partner has made, you will be liable for. But at least between the parties, well, then you can have recourse against that other partner if they do something outside of what your agreement and understanding is. So moving on up to another level of business structure then is years and years ago, probably about 150, 200 or more years ago, the concept of a limited partnership came up because everybody saw what the inherent problems are in operating as a sole proprietorship or operating as a general partnership. So the concept of limited partnership basically is that you have at least one party that serves as a general partner. They have full exposure to anything that's going on in the business, any types of liabilities and so forth. But then you could bring on a number of limited partners in business as well. And basically, the limited partners, you could say when you think about the concept of silent investors, really that is the limited partnership model. So individuals can come in, invest money into the business enterprise, and in exchange for the limitation on liability, where they're only exposed if the business goes down to the extent of their investment, then they agree that they will have no say in the business decisions of the business. So they're limited in that. So if I were a limited partner and I invested $50,000 as a limited partner in the business, well then I stand to lose that $50,000 if things were to go bad. But I would not have a say into how in the direction of the business. So it can be a convenient vehicle in some cases. Where I have seen where it has worked sometimes is if, say, parents are the general partner, and then maybe they're trying to kind of transition some of the ownership interests to children. But they don't want those children to have a say in the way that the business is operating yet, and so they reach a certain age. Well, then the limited partnership vehicle may be good in that type of scenario. Limited partnerships in the state of Florida, that particular vehicle is the most expensive vehicle to register. It costs $1,000 to register as a limited partnership, and it does require a written partnership agreement. But the profits are taxed at the partner level. So, because of all those inherent problems and issues, I'm going to move now to a legal structure in which now we have completely moved to where there's going to be a separate legal structure that's the business, that is something that is other than the business owners themselves. And that is a CCorporation. So if you go to register a corporation in the state of Florida, you go to sunbiz.org, or you do it through your attorney, and you establish a corporation, and you do nothing more but establish that corporation, well then you've created what's called a CCorporation. And one good thing about that is that now, as I was saying earlier, you have an entity that is the business that is entirely separate from the individuals who own the business. So that could be an advantage. And because there is that distinction between the two, well then the owners are only exposed to limited liability. So anything that's going on in the course of the business, any types of obligations that the business enters into, those are the business's obligations, as long as the individuals that own the business stick to and really ascribe to the legal structure. So every time the business enters into agreement, you want to have down at the end of the agreement, XYZ Corporation, or whatever the name of the business is, by, and is signed by whoever the owner is who's signing it in their capacity. So you want to be very careful to make sure that that corporate structure is recognized and honored in everything that you do. The one negative, a major negative of a C corporation is that a C corporation is subject to what they call double taxation. So what that means is that as the business makes a profit, well then that profit that a business makes is taxable. But then that profit is also the basis of distributions to the owners. And when it falls into the hands of the owners, well, then that becomes personal income that is taxable as well. So that is not necessarily a desirable outcome. C corporations do serve a good purpose in certain circumstances, however, depending upon, a lot of it has to do with taxation purposes. A lot of it has to do with what the future direction of the business is going to be. If you're looking at bringing in possibly venture capital, a C corporation might be an appropriate vehicle or might not be. If you're talking about doing an independent, if you're doing a public offering at some point, C corporation might be a good vehicle or might not be in this particular stage of the business startup. So you want to think about those things. But what is going to be important is that in establishing the business, you need to start it up by filing with the Secretary of State articles of incorporation. And what I would recommend is also, although this is not a state requirement, developing bylaws as well. Because those bylaws set the rules, the governing rules between the parties as to how they're going to operate their business. Now, because of the limitations and in particular the double taxation of inherent in a C corporation, well then there are things that are called S corporation. So once that C corporation is formed, then what you want to do in order to establish an S corporation is to file for S corporation status. S stands for Chapter S, I believe, of the Internal Revenue Code. And so that basically to avoid that whole problem of double taxation. Nobody wants to pay taxes twice on the same money. So again, you can have one or more owner of an S corporation. The same limited liability as you have with a C corporation is a separate entity from the individuals. And for income tax purposes, the corporation pays no tax, but as the owners are issued a dividend, well then that becomes personal income to them, and it would be subject to personal taxation. For any corporation, what IRS does not want is that eventually, once the corporation has become successful, they don't want that the owners to only take distributions, because those distributions are, as such, are not subject to the personal income tax. Are not subject to payroll taxes. Whereas if an owner is actively working within the business, well then they should also then take a reasonable salary, IRS anticipates, and then that reasonable salary is subject to payroll taxes. There are annual filing requirements with an S corporation. It's very important to make sure that you stay on top of those. I know of many businesses that miss their annual filing. And in addition to the $150 or so that are required to be paid with the annual filing, well then currently in the state of Florida, there's an additional $400 penalty for missing for not filing in time. So those are things you just have to watch out for. So now I want to talk about LLCs. And in a way, I want to talk about some major distinctions between an LLC and a corporation, things that you might want to consider as far as more of a, from an operational standpoint. But, in general, with LLCs, you could have one or more owner again. You have, is another one of those entities where you have limited liability because it's a separate legal, it's a legal entity that's separate from the owners. And amazingly enough, even though LLCs have been around now for several decades, IRS has not really come up with a unique way of tracking them or treating them for tax purposes. So basically, you can choose with an LLC how you want to be treated on a federal IRS purpose. So you could choose to be treated as a sole proprietorship. You could choose to be treated as a partnership, or as an S corp, or as a C corp. Many people that I know, if it's owned by more than one person, well then they will look at it being treated the same as a subchapter S corporation. But the big distinction that I find, and this is something that you may want to consider, because I hear so many people when they want to start their business, the rave now is, I automatically want to start as an LLC. And there's not necessarily anything wrong with that, but I think that the big distinction between an LLC and a corporation is that there is much more flexibility in how you can address the profits of the business and losses with regards to how the individual owners are going to be treated in that regard. So, in a corporation, let's say that it's a 3-member corporation. Each member owns a third of the business, 33%. Well, then by default, then each owner is entitled, as far as the profits or the losses of the business, to the same percentage as their percentage ownership. So you own it 33%. Well, then you're entitled to profits that are distributed 33%. With an LLC, there's a little bit more flexibility. And this can be very advantageous. So, and let me give an example. Let's say that I'm in a business with 2 other individuals, and we want to start a restaurant. And one of the 3 of us, that person has a lot of restaurant management experience. So they would be responsible for really managing the restaurant, but they don't really have any type of cash or anything like that. And then another one of the individuals, they are the chef. So they, so it's going to be a place that the chef is going to be operating, and the chef will have ownership interest in this enterprise. And then I come in, and I'm not good at managing the business. I'm certainly not going to be back in the kitchen as the chef, but I am bringing in a ton of money to get the business going, or I'm going to be bringing in real estate that's necessary for the business to be located at. So among the parties, what an LLC allows, because you can see that each one of us is bringing something different into the business. Our contributions are very different in nature. So what an LLC allows is a certain amount of flexibility by agreement among the parties as to then who would be, under what circumstances and under what period of times, entitled to what percentage of profit. So we're coming in, we own it 33%, 33%, and 33%. But I might decide, or I might advocate that, well, since I'm bringing in all the money, well, then I think that for the first 2 years that I should be entitled to 45% of the profits. Or the chef might say, well, this isn't going to operate without me back there cooking. I think that I'm going to be entitled to, a larger percentage of the profits. But whatever it is that the parties agree to, well, then the LLC structure allows a little bit more flexibility. We looked at, in the corporations, you have the articles of incorporation and then the bylaws. With an LLC, you have articles of organization and the operating agreement. And again, the articles of organization are required to be filed with the Secretary of State. The operating agreement is not. But with the LLC, I strongly encourage the business owners, as the business is being formed, to develop and put in place and agree to and sign a very well thought out, very well structured operating agreement. I will say that of the businesses that I have consulting experience with that launched their business and do not have an operating agreement in place, is almost like clockwork. About 18 months into the operation of the business, it almost invariably happens that disagreements arise. What do you mean that you made this decision and so forth? I thought that I was going to get a higher percentage of return on the business. All those types of things arise around that time. But if they're all agreed to up front, and everybody understands how the business is going to operate, who has authority to make decisions, who has authority to make the day-to-day decisions, and where the long-term or the large decisions making lies, as long as everything's worked out, well, then that's fine. And if it's and if it is a multi-owner LLC, I also tend to encourage them to have that operating agreement actually developed by an attorney. Don't just download some form and sign it, because you want to have an agreement that's in place that really is unique to your business. So now I want to turn our attention to some other legal issues that arise, some fairly frequently and then some from time to time. So, as you start your business, you found this great piece of property for the business to be located at. Make sure that you have vetted that business to address any type of zoning issues. You don't want to start moving forward and making commitments on a piece of property, and it turns out that it is not zoned for the type of operation that you want to engage in. It's also very important for home-based businesses. If you're going to start engaging in some activities in which it's clear to the outside world that you have business activities going on, and their customers are coming in, they're parking in front of the place, all those things, where your residence is may or may not, and probably is not zoned correctly for the types of activities that you're engaged in. So you want to really look at those things. Business tax receipts. Depending upon the county in which you're located, that may be a requirement, and it might be an annual fee that you have to pay in order to the tax authority, to the tax collector's office in your county, in order to allow the business to operate. It used to be known as an occupational license, and now they call it business tax receipt. But that may or may not apply depending upon what county you're in. There are over 200 types of professions and other types of business structures within the state of Florida that require special licensing. Cosmetologists, funeral directors, general contractors. So if you're in any of those types of businesses that require licensing, and you probably know that from your experience, well then you want to make sure that those things are in place and they are kept current. If you're in the hotel industry, or restaurant industry, or any business that handles food, grocery stores, and so forth, well then health permits becomes very important. And then, of course, one of the overlooked areas, I think, for many small businesses is the value that they have in their intellectual property. And that includes things that are on their websites, that may be something that they should protect by trademark, inventions that they might have, and then also copyrighted material. So I'm just going to go very briefly because there's sometimes this confusion between those three terms, trademarks, patents, and copyrights, to really talk about what those distinctions are. So a trademark, in essence, is some type of mark. It has to do with your branding. It might be something where you've come up with, say, a unique name or a unique style or something, and then you want to protect your interest in that particular brand from the rest of the world. So whenever you display that, and you want to do it regularly in order to protect it, well then you want to you've seen where they have like the initials TM under various things on websites and so forth, or in writings. That's where they're recognized, where they want to protect their trademarks. And if it's registered with the U.S. Patent and Trademark Office, well then that would be a registered trademark. Patents, on the other hand, have to do with inventions. It's something that has been created. So some of the tests of something that's patentable would be that it has to be new. In other words, it has to be something that has not been patented before, or a concept has not been patented before, or is not out there in general use already. And it certainly has to be useful in that it really has to be something that really works. So you come up with something, and it has to work for the purpose that you intended it to be. So really look at those types of items before you proceed with a patent. And I strongly suggest that if you're going to be that if you want to pursue a patent, that you do so through an attorney. And then the third concept is copyrights. So copyrights, we're looking at a work that is reduced down into some type of recorded or registered form. So writing a book, you can copyright the book because you're taking something that's written, you're taking something and you've reduced it down to writing. Recordings, software, movies, videos. Those are the types of things that can be copyrighted under the appropriate circumstances because it's something that's being reduced down into a written or printed or recorded form. So I wanted to go over those concepts. Again, I think that, as I was saying at the beginning, that the consideration of the appropriate legal structure, unfortunately, is undervalued by a number of people starting their business. It's something that I really think is worth you taking a second look at and making sure that the legal structure that you select is the appropriate one and that the appropriate agreements are in place in order for all the owners of the business to get out of that business what they truly intend.